Welcome to Continuous Improvement, the podcast where we explore strategies and insights for enhancing various industries through continuous improvement. I'm your host, Victor, and today we'll be diving into the fascinating world of virtual banking in Singapore's financial industry. Virtual banking has undoubtedly reshaped the way we think about financial services. However, with innovation comes the need for effective regulation to manage risks and ensure the smooth functioning of the market. In today's episode, we'll be discussing the delicate balance between virtual banking innovation and regulation, and I'll be sharing some valuable advice for regulators in Singapore. But before we dive in, let's understand the motivations behind regulation in the fintech industry. Uncertainty, resource conflict, disruption, and unforeseen events are some of the key drivers that lead regulators to assess the risks associated with emerging technologies. Now, the adoption of cloud technologies has certainly revolutionized the financial system, offering unprecedented potential. However, it also brings new risks that require safeguards to prevent system collapse. This is where insightful regulation plays a crucial role. When it comes to regulating the fintech industry, regulators can consider three approaches: rule-based, principles-based, and performance-based systems. In a rule-based system, strict rules and processes are set by the regulatory authority, leaving little room for interpretation. On the other hand, a principles-based system provides guiding principles for market players, allowing them some freedom in achieving their regulatory responsibilities. Lastly, a performance-based system sets specific benchmarks for market participants to meet or exceed. Now, each approach has its own benefits and challenges, but finding the right balance is vital for Singapore's fintech industry to thrive. The Monetary Authority of Singapore, also known as MAS, aims to position Singapore as an experimental centre for fintech innovation. Their long-term goal is to attract fintech innovators to the Asia-Pacific region. To achieve this, MAS has embraced the use of regulatory technology, or RegTech, to streamline compliance processes and foster a conducive environment for innovation. But what about virtual banks themselves? How can they navigate the evolving regulatory landscape? It all starts with establishing an open and respectful relationship between policymakers and stakeholders in the fintech field. MAS has already taken steps to address this by amending its guidelines on outsourcing for financial institutions. These guidelines acknowledge that virtual banks can benefit from cloud services. However, they also require due diligence, robust governance, and risk management processes to be in place when utilizing cloud services. Cloud security is of utmost importance, and regular reviews of cloud security environments should be conducted. Compliance with industry certifications such as ISO 27001, ISO 27017, ISO 27018, MTCS Level 3, and PCI DSS Level 1 ensures the highest level of security standards. Additionally, MAS provides guidance on risk management techniques and expects financial institutions to comply with these guidelines and report their compliance accordingly. In conclusion, successful cloud implementation for virtual banks requires a deep understanding of their current and desired states. Proper goal setting and the development of work streams specific to cloud migration are crucial. By embracing innovation while maintaining effective regulation, Singapore can become a hub for virtual banking and secure its position as a fintech powerhouse in the Asia-Pacific region. That's all for today's episode of Continuous Improvement. I hope you gained valuable insights into the relationship between virtual banking and regulation in Singapore's financial industry. Stay tuned for future episodes where we explore more strategies for enhancing various industries through continuous improvement. Thank you for listening, and until next time, I'm Victor signing off.